Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome. This is Steve Meisinger, your host for today's ISE webinar. I'm pleased that we have Toni Hansen with us today. Toni is the President and CEO of Trading from Main Street. Toni uses technical analysis to make her views of the various markets that she trades. So she's been with the ISE many times, and she always brings us great insight to the markets. She's going to help you understand a little bit more about market timing. And of course, if you have further interest in Toni's teaching concepts, you can go to www.tonihansen.com, and she is the CEO of tradingfrommainstreet.com. Without further ado, I'm going to introduce Toni Hansen. Toni, it's Steve Meisinger. Glad to have you.
I know some of you, I gave a little bit of short notice today with a new registration URL, so I'm very pleased that so many of you guys were able to attend today. On today's session, we're going to touch upon some of the topics that I've talked about before in the past with these the ISE options courses. I've done a number of them with Steve over the last couple of years, really. Tends to average out about every 4 months or so. We have another one coming up at the beginning of March, so mark that on your calendar. I believe it's on March 1st. So I'll be teaching another class then as well. Today's session, I want to talk about some of the key strategies and concepts that I use in my own trading. In particular, there's going to be one type of strategy that I'm going to show you, and we're going to look at a couple of variations of it. To begin with, a little bit of an introduction here. We'll go through some basic disclaimer stuff. I want to have, Steve, are you still around quick?
Yes. Yes,
all
Toni,
right, I'm going to have you give them a little bit of an introduction. I know we have a lot of people here, too, that don't really trade the FX options. So if you want to give a brief introduction here as to what you guys offer for just a couple minutes, and then I'll get started.
Sure. Just to remind everyone, obviously options are not suitable for everyone. And if you want to learn more about options, well, you should keep coming back to fxoptions.com, or I'm an OIC instructor, Options Industry Council, and you can go to optionseducation.org, and you can get the characteristics and risks of standardized options. You can also learn tons there. Regarding FX options, all you need to trade FX options is an equity options brokerage account. So if you have an account where you're able to trade the largest equities, you can trade these currency options, these FX options, very easily. So they're exchange listed, they're cash settled in US dollars, European style, and you can use spreads. We now have a couple of the currency pairs are traded in both US dollar and in the counter currency. So for instance, the Australian dollar, the British pound, the euro, and the New Zealand dollar, well, what we like to call the spot currencies, spot currency conventions. So you can trade them just like you're looking at the spot market, or you can trade the dollar-based. Either way, the symbols are right there on slide 4, and you could reference those at fxoptions.com. Toni, I'll turn it back to you.
Great. Yeah, like Steve pointed out, when the FX options first came out, some of them, we always had the base currency was the US dollar. So if you were looking at it compared to like the spot market, the charts would end up being flipped upside down. So you would have like a buy position on the spot market, whereas it would be a sell when you're looking at the options. So now there is the offering of a couple of these pairs here where your charts are going to translate and correspond pretty well now. As we're going into this, let's look at how we start to build a trading system. Now, for those of you that have been following my techniques and my style of market analysis over the years, some of this is going to look really familiar for you. I know we have a lot of new people here as well, so I'm going to go over some of the basics for my style. Basically, when you're trading options, it's really important not only to have a feel for the direction of the underlying security that you're trading, in order to be able to accurately project not just your entry and your stop levels, but also your target levels, and to know which one you need to be getting into. You need to also assess the length of time it's going to take for prices to hit these objectives. And this is a huge difference between options and trading like an outright security. So using my style of market analysis, I base it upon what I call building blocks, and these are specific characteristics or traits that are a part of price development. Now, we're going to go through just a couple of them that are, I would say, the most important ones when it comes to trading options. And we're going to go into these in a little bit of detail. But basically, anytime you're looking at a strategy in any type of security, whether you're trading options, futures, Forex, no matter what, you're going to see certain traits for each strategy. And the ones that we're going to look at, the names of these are going to seem really simple and straightforward. We're going to be looking at things like support and resistance levels, pace and momentum, trend development, and trend placement. Now, when you look at these on the surface, these are concepts you're probably fairly familiar with, things like support and resistance levels, prior highs, prior lows, that sort of thing. But when you're looking at these as building blocks of price development, you're not just looking at one thing or one trait. You're looking at how they correspond one to another. And when you're building a system, you're putting all of these together, and how they form is going to impact your odds of success on a strategy. One of the questions that I get, I swear I get this question probably every other day in an email or online Facebook or something, is people ask me, if they take my style and my trading strategies, my style of market analysis, and they apply it, what can they expect to see as return? What are they going to make when they take my strategy? And the thing is that no matter how you trade, you're not going to actually be able to do exactly what I'm doing. And this is because we all have different parameters for what we not only accept as our risk, but also where our personality traits lie. Like, there's many, many types of strategies and many, many variations of strategies that I trade. And I am actually a pretty conservative trader. So most people end up trading more actively than I do when you're day trading. But I like to keep things where I'm taking strategies that I know my odds of success of getting at least 2 to 1 are 80% or higher. Now, this is something that a lot of people struggle their entire career to achieve, and it's certainly not achievable for everybody, but it doesn't have to be. When we look at each of these traits impact the success of a strategy. And you can add as many pros or cons as you want to that suit your risk. I know a number of traders, for example, that they will take strategies that they know are successful 40% of the time, and yet they know that when they are successful, those strategies are going to generate gains that are substantially larger than any of the losses that they had. So I personally can't deal with that. I don't like to take that many losses in order to get a decent gain. But it works for some people. And as we go and look through these, it's going to make more sense what I'm saying right now. You're going to start to see where you can kind of tweak these setups to suit what your personality is. And the fewer cons you allow on a setup, the higher your chances are going to be for a successful trade. And you can also tweak what you would expect for a reward potential on a strategy. I won't take a setup, for example, in most cases, if I don't expect to get at least twice what I'm risking.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.